Well, welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Jordan, let's start with silver. Silver is up, I think, 11 of the last 13 trading days. And one thing to consider is back in late May, silver was down at about 14 and a quarter. And now silver is closing in on $17 an ounce. This is a very strong move for silver. Of course, nothing goes straight up quite like it has just in these last about 3 weeks of trading. But what are some of the levels you're going to be watching on the charts and some of the other factors that either have you very bullish in silver or thinking that maybe a pause is around the corner? What can you share with us?
Well, Corey, more so than levels, to me, the monthly close coming up after the Fed meeting next week. I want to see if silver can maintain these gains. And silver's trading at about 1660 right now, and it in the last week or two, it cleared two key levels. The first was the 400-day moving average, or you can overlay the 80-week or the 20-month if you're looking at the monthly and weekly charts. And basically, silver, that moving average, silver, at least on the daily chart, it tested it like 8 times since the end of 2017. And it was rejected every time. And so finally popping above that was critical. And in addition to that, the next key level was, I want to say, around 1620, which was the February peak earlier this year. And so silver has now cleared that with ease, really. And so the next key level for silver is 1725, which is the June high from 2018. And honestly, breaking above that level of about 1620 gives a projected measured upside target in the mid-18s. And if you go back to 2014 and you're just drawing horizontal lines around key levels, you can see that in the mid-18s, low to mid-18s, there's definitely a key level that's going to be key resistance. So this particular move, I think silver is going to make it up to 18. A little more medium term after that. Obviously, 2021 is a key level. I think 20 and 21 silver would probably coincide with 1525 to 1550 gold, and the that target in the low to mid 18s probably coincides with you could say possibly 1475 gold, but probably more likely 1500 gold. So those are the levels that I'm looking at. It's good to see silver's really leading here because I thought that we'd need to see gold really clear 1420 to 25 for silver to get going, and gold did clear those levels, but it's come back to it. It's kind of lost energy in the last couple of days, but silver has still powered right through that resistance in the 16s. Now it's in the upper 16s. So silver definitely looks good. Obviously, it's getting very overbought on a short-term basis, but that's a good thing. We've talked about it before. I mean, I know it's when you see something get overbought after a great move for a couple of weeks, it's hard to get in there and buy it because you don't want to chase strength. But I don't really see silver having that much of a correction here, Corey. The only thing I can see is that we get a negative reaction after the Fed. We get a buy the rumor, sell the news thing after they cut, and maybe silver comes back and retests 1620, but I mean, that would be a great buying opportunity if that happens.
Okay, so Jordan, can we take a quick look at that monthly silver chart too? Because the daily obviously looks very encouraging because of the strong move we've had really since the end of May. But the monthly chart, you know what? It was a pretty ugly chart consecutively. Lower highs after that 2016 bounce. There are some mixed lows in there, but it was still trending lower. Now that we're getting this bounce, it's still kind of a small candlestick in the big picture of things right here. What are you looking at for this monthly chart? Should I be more encouraged by this monthly chart?
Yes, I think you should be. And this is something I noticed coming into this month, even before silver had really taken the leadership from gold. Because before this month, what you saw in the past 2 months is you saw a bit of a bullish hammer in May, but that was followed in June with a strong white candle. And so when you're looking at, even if you're just looking at the last 5 years, you saw, I mean, it's not a textbook double bottom, but I mean, we saw that bottom at the end of 15, And then we saw a bottom at the end of 18. And silver, with the action in May and June, it really confirmed that it had bottomed and that it was going to hold 14 going forward. And so after June, what we really wanted to see this month was strong follow through to the upside. And so at this point, we have silver is, for all intents and purposes, it is going to close above monthly resistance at 16, unless something really bizarre happens after the Fed. Silver on the monthly chart, I mean, it looks very bullish and it's in a good position. I really like how the monthly chart is setting up. And I think, it's more likely than not that silver is probably going to continue to trend higher over the next couple months towards that target in the 18s.
Okay. Now, Jordan, let's also look at gold, because you mentioned off mic and even in your first answer, this 1420 level for gold. It has peeked its head above 1420 a couple times, but it's been more intraday highs as it has sold off kind of in the later part of the day. And 1420 seems like it is becoming a fairly strong resistance. What do you think about that level?
Yeah, it's really 1420 to 1425. And if you go back to I want to say the second quarter of 2013, really after gold crashed and it started to find its bottom, it came up to, I want to say 1418, which was really the second rally attempt. The first attempt, it got up to 1475, but gold was still crashing at that point. So those are the key levels, really. And there's a strong Fibonacci target around 1475. But really, other than 1420, there's really very limited resistance from 1420 to 25 up to the 1500s, basically. So my thought process was, when we see a couple daily closes above 1420 to 25, gold can start to run. Now, that hasn't really happened. And so, I mean, it did trade up to 1450. Of course, that was the day it had the big reversal. But it hasn't really come back. I mean, it's still, the last couple of days, it's still been holding up around 1420. So, looking at the price action, Corey, since the last month, at least on the daily chart, it's not that impressive. It's kind of choppy. There's a lot of wicks, is what they're called in technical analysis, where you see these strong moves intraday, but the gold didn't close near the highs of the day. I mean, several times in the last month, but you really don't want to overcomplicate it. I wouldn't call it a failed breakout at this point above 1420. I mean, simply put, if you look at the price action of gold, it still hasn't, at least in the short term, it's still made higher highs and higher lows. It hasn't really violated any trend line. And you have to look at what silver doing, what are the miners doing, and they're really leading gold very strongly. So I am not that concerned with gold, even though the price action recently is kind of iffy. I would not read too much into it, given the strength of the more volatile and risky parts of the sector. And maybe, Corey, it's just a situation where we're going to see silver in the gold stocks trend higher and price in 1,500 gold before it actually happens in gold. That's something that we kind of see at the end of these moves in precious metals, where gold really starts to lag because the other parts of the sector are doing so well. So I wouldn't, even though looking at gold by itself, not that great of a chart right now, but when you look at everything in the big picture, I don't want to be bearish on gold here.
Well, and can't you make the argument, too, that with the gold stocks moving and silver moving, they're more or less confirming this recent breakout in gold? Even if gold is choppy sideways, these other correlated markets that are moving higher do, at least in my eyes, confirm this recent breakout.
Yeah, absolutely. You said it better than I. And look, it would be more concerning if gold were trading at these levels and by itself looked bullish, but silver hadn't broken out yet, and the mining stocks like silver, they weren't performing as well. So yeah, I mean, you're getting strong confirmation from silver and the gold stocks.
Okay, can we quickly look at those gold stocks too? Let's look at something like GDX that has had a very nice move, especially over the last, let's say, 2 to 3 months. And it is actually closing in on that level that it hit back in 2016, the high of 31.28. We're currently right around, let's say, 28, but that move has been very strong. Do you think we could see a bit of a slowdown in that momentum we're seeing to the upside here in GDX?
It's definitely possible with the Fed coming up. Perhaps we're seeing some players take profits and reduce exposure. Because there could be the buy the rumor, sell the news thing. At least in the last 3 or 4 days, we are seeing a bullish consolidation in the miners, but they're very overbought. And with the Fed coming up, it's possible they could have a little correction. You look at GDXJ in the last 4 days, it can't get above 40. For GDX, as you mentioned, I believe it's just below 28.50. So, it would not be a bad thing if we saw more of a correction in these stocks. But, everything's really looking bullish. There's really strong breadth in relative terms. If you look at how the miners are performing relative to the stock market, they broke out last week. Relative to gold, they're very healthy at multi-year highs. So, everything looks good, and usually this kind of strength begets more strength, but that doesn't mean you want to immediately chase it the next day. So we'll see what happens. I would hope that we get a correction around the Fed and kind of rein in these hot markets a little bit. But the other scenario, Corey, is in GDX, we get a move up to 31, retesting the high, and then we get more of a correction at that point. So we'll see how it plays out with the Fed.
Let's get your quick comment on the Fed. What do you think would cause maybe a bit of a correction? What are you going to be watching most closely, simply beside the fact of a rate cut coming?
Well, the Fed, I don't really watch what they say. I don't really pay attention to them. It's more just how the market reacts, and I tend to think we're going to see a 1/4 point cut this month, and then maybe another 1/4 point in September. But it's possible that they do a 50-point cut now, and then they try not to cut in the future. It really depends on, if inflation expectations start picking up, will the data pick up a little bit, or do we see higher inflation expectations and they still need to cut a couple more times? If that happens, then, gold is definitely going to go to 1,600 or 1,700. I would say in the next 6 or 9 months, if they have to cut multiple times. So, to me, we've had a really strong move, and I see the Fed I see the market as, using the Fed to react negatively to whatever they do. And so that's my concern with the miners here. And I would prefer to see a pullback around the Fed rather than more and more strength, because if we get that, again, strength is good if it gets more strength, but we're a little overbought right now on the miners, and so if we don't get a correction around the Fed and they just keep running, then we could see a larger correction, nothing serious, but a larger correction at some point. Perhaps as GDX tests the 2016 high at 31. So we'll see. I really don't have that strong of an opinion either way. We'll just have to see how the market reacts.
Okay. Well, Jordan, we're going to wrap it up there. And yes, it is all about market reaction, but I think just seeing these correlated markets and even gold holding up there, it's a very encouraging picture for those precious metals investors. And all I can say is we're finally getting that breakout and finally getting some of these other confirmations that are crucial to bring in more money. And that's what we're seeing, a bit more money flow into the precious metals sector. Jordan, thanks for your time today.